Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. In today's video, we're going to talk about Square's absolutely mind-bogglingly massive $29 billion buyout of Afterpay. So in today's video, I'll discuss the details of the deal, what is Afterpay, how does Afterpay make money, Afterpay's financials, why will Square purchase Afterpay, what's in it for them. I will go over that. I will discuss the synergies of the deal, and then I will discuss what will I be doing. Am I going to be buying Square stock? Will I be selling Square stock? So let's go into that today. Don't forget to smash that like button and subscribe. I've got a monster of a video for you today. And remember, this video is for entertainment purposes only. I'm not a financial advisor. I'm not your financial advisor. So please, do your own research. Let me switch screens. So let's take a look at Square's stock price today. And tell you what, if you're a Square stockholder, congratulations. You made out like a bandit today. Up 11.52% to $275.75 per share. That is absolutely massive. Square just hit a record today, an all-time high. Market cap $125.5 billion. So what's in it today? Actually, two things happened today. There is this deal. There's also the Q2 earnings release. I'm going to go over the Q2 earnings release in a video that will release maybe later today, maybe tomorrow. So make sure you hit the notification bell so you get notified of that video when it drops. So what happened here? Square said it reached a deal with Afterpay to acquire the Buy Now, Pay Later company in an all-stock deal valued at $29 billion. Now keep in mind, this is an all-stock deal. That means you are being diluted. So when a dilution happens, in my opinion, the benefit comes with if there's synergies. I'm going to go over synergies later, but this is all stock, so it's all about the synergies here. The sum needs to be greater, the company needs to be greater than the sum of its parts. So Square said the deal is expected to accelerate the company's strategic priorities for its seller and Cash App ecosystems. Square plans to integrate Afterpay into its existing seller and Cash App business units, enable even the smallest of merchants to offer Buy Now, Pay Later at checkout, which will give Afterpay consumers the ability to manage their installment payments directly in Cash App. So this is a deal to get more customers, many more, millions more customers into Cash App that weren't there before. So basically increases their install base into Cash App, as well as the seller ecosystem, gets them a lot more merchants, which we'll go over in a second. This also gives Cash App customers the ability to discover merchants and Buy Now Pay Later offers directly within the app. So there's going to be like a little store they can do where they can find more offers so they can Buy Now Pay Later. Actually, if you visit Afterpay's website, a large portion of it is actually a store. So you can just view various offers from various online retailers and then purchase it from there. So it's actually quite useful. So moving on, Afterpay serves more than 16 million consumers and nearly 100,000 merchants globally, including major retailers in fashion, homewares, beauty, and sporting goods. Square said in a statement. Afterpay also assists merchants in growing their businesses, by helping to drive repeat purchases, increase average transaction prices, and provide their buyers with the ability to pay over time. I'm going to discuss the first two in a little bit more detail because that's not immediately obvious in how it benefits those two categories. So I'll discuss that in just a moment. But obviously with Buy Now, Pay Later, the idea is that you buy now and you pay later. Let's go over that in a second, actually. So this is the Afterpay business model. So how does Afterpay make money? How does it work? So Afterpay is a company that allows customers to pay for items over the course of 4 installments. It works together with, it's actually 100,000 retailers now. This article is a little bit old, even though it says updated on July 5th. They forgot to update this one particular line item. So they have adopted its payment platform, Afterpay. So Afterpay makes money So it makes money actually two ways. It makes money through merchant services. So the merchant has to pay Afterpay to use its service. So the Afterpay charges merchants, I think it's between 4 and 6%. I'll show you in a second. Plus a 30-cent per transaction fee. And then they also make money through late payments. So if the customer's late on a payment, they get charged. Moving on. So some of the retailers that Afterpay has, and these are huge retailers, huge just online retail presences. So you got ASOS, Pandora, which I'm sure you all know, The Real Real, Lululemon, Forever 21, and hundreds more. Now, the one thing about Afterpay is they're actually based in Australia. They're founded in Australia, so they have a strong Australian presence and also a strong United Kingdom presence, UK presence. So this will also help to expand Square into those two territories. And how it works is this. So from a customer's perspective, when they check out the online store, they simply select Afterpay as their preferred method of payment. So instead of credit card or whatever else, they select Afterpay. Pretty simple, and that's kind of makes sense. Then they're prompted to pay for items in 4 interest-free installments. Afterpay does not charge any interest. This is the key thing. There's no interest or additional fees as long as the items are paid on time. Okay, one source of revenue is late fees. One benefit of AutoPay. After AutoPay allows consumers to order items free of charge and test them out first. Should they not be of their liking, they can simply send them back to the retailers. So this is actually a huge consumer benefit. Customers will like this. And this will allow them to be able to purchase items more freely, saying, you know what, this is what I like, let me buy it. And the other source of revenue is merchant fees. So the merchant rate will be between 4 and 6%. This depends on the size of the merchant. Now this isn't crazy. Credit card processors currently today charge in the low single-digit percentages anyway. So what happens is instead of paying the credit card company in low single digits, they're just going to pay AutoPay in their 4 to 6% range plus their 30% transaction fee. So it's a replacement of the charge. They will never pay for both. They're going to pay for AutoPay and not the credit card merchant fee if the customer chooses AutoPay. So the customer opts for AutoPay, the merchant gets to skip the credit card merchant fee and only pay the 30% flat fee and the 4 to 6% AutoPay fee. So then the question then becomes, why would a customer choose to use buy now, pay later over a credit card? So this is the benefit of buy now, pay later. They get to buy now and pay later. Okay, I'm just joking, kind of. Let's move on. Okay, so let's say you're shopping in the store and you find some awesome thing that you want. Let's say, for example, there's a laptop that you want. This beautiful laptop. It's $1,500, but you've only got $1,000 on your new bank account. You cannot afford to pay it. So you have actually a couple of options for buying this item, or a couple of options available to you. So your options are, number 1, you can settle for something cheaper, so the merchant makes less money. The customer then is more likely to return the item later and then get the item that they wanted. And then the merchant has to sell the opened item at a huge discount to offload the inventory. Merchants do not like this. They do not like to receive items back because of that discount, that they have to then just offload the items as an open box item, and basically just eliminates or even just destroys the profit off of that item. It's not profitable anymore once the item gets returned at all. And merchants just do not like that at all. I used to work in retail in a time long ago. So credit cards, that's option number 2, is to pay with credit cards. Now credit cards work great when you don't have the money on hand, but you have to pay it all back in the next billing statement. It has to be the next billing statement. What happens if you don't pay it all in the next billing statement? You get dinged with a super high, absolutely insane interest rate. It's 30% per year interest on credit cards. 30%. I mean, I know you all know this, but that is an insane interest rate, and credit cards are just a complete ripoff. You got to pay them immediately. Okay, so option number three is don't buy it at all. The customer waits until they have the money. The merchant just does not get the sale. So with buy now and pay later, the average order value increases because the customer gets what they want, what they really wanted, and doesn't have to settle for something cheaper. So they get that $1,500 beautiful laptop. They don't have to settle for the $1,000 laptop that they're just going to return later anyway. So they get what they want at the higher price, the higher margins. The online retailer thus makes more money. So Afterpay claims that the per order value increases 10 to 20% for customers choosing Afterpay. That is huge. You know what that means? It means that Afterpay pays for itself. I mean, when it pays for itself, why not use it, right? This more than covers the merchant fees. The customers return fewer products as well, since, they got what they wanted. The second source of revenue is late payment fees. You can read this chart if you like. I'm going to continue. So how's Afterpay's stock price? This is actually from Friday. They're at $70.84. Market cap $20.7 or $20.8 billion, which is actually quite low compared to their February high. So Square actually got quite the deal, if you want to call it. Afterpay is an expensive company. Go over that in a second. Let's continue. So let's take a look at Afterpay's statistics. Afterpay has a forward PE of 217.4. That is quite the big forward PE. They also have a price per sales ratio of 40.65. That is ginormous under regular company standards. So what's going to happen here is Afterpay is going to have to be growing substantially in order to command these elevated ratios, because this is actually quite expensive under traditional standards. So let's take a look at Afterpay's financials. So actually this is the most recent that I could find. This was on Afterpay's website. So this is for the half year ended December 31st, 2020. So what happened is on December 31st, 2020, for the 6 months prior, this is the half year before that, they had a total income of $417 million. That is an increase of 89% year over year. Now, this is where it gets a little confusing. They actually split EBITDA into two different categories. There's an EBITDA where you exclude significant items, which posted an EBITDA of $47.8 billion, which is an increase of 521%. That is a massive increase. However, you'll notice that there is a second EBITDA, or there's a, right here, there's a net loss on the financial liabilities at fair value of $65 million. So, what is that? What happened? So this drove them to a loss actually, and it's a significant charge. So here's the detail of that. The loss was due to a non-cash ClearPay put option liability. It's a complicated deal set up between Afterpay, ClearPay, and ThinkSmart. And yes, those three company names are all I find them humorous. Afterpay, ClearPay, and ThinkSmart. I just think those company names are just hilarious. So the scope of this deal actually goes beyond the scope of this video, but I've included a link in the description if you want to read it. Just keep in mind this has to do with the last 10% of ClearPay that Afterpay does not currently own, and this is a non-cash liability. So read it if you like. I would actually would suggest reading it, but it goes beyond the scope of this particular video. So the next step is synergies. Again, the combined entity needs to be greater than the sum of its parts. Why? Because this is an all-stock transaction. The way I work with things is for all-stock transactions, it's just the way it has to be. Because you're getting diluted. So in order to accept the dilution, you need to be able to say, you know, I got this instead, and it's worth more now than I got diluted, because otherwise it's just not worth it. So here's the synergies that we have. Synergy number one is they can cross-sell each other's services on the other's network. So you can get autopay customers on the Cash App and Seller network, and then you can offer more options to pay. You can offer more options to pay to Square's existing customers to increase sales. There's a potential. It's not going to be the absolute number because some of these may already be Square customers, but there's a potential of up to 100,000 merchants that could be moving onto Square. We'll see. It's a sales platform. The sales team will be hard at work on this. Look at as many of these across converted as possible. There's also a potential of up to 16 million customers transitioning to Cash App. So this is a big clutch, a big hammer that Square is trying to use to leverage Cash App in competition with Venmo. Square is trying to do whatever they can to make Cash App the de facto, I'm going to call it the money system for people. They want to just eliminate they want to basically eliminate the competitors. No more Venmo, no more any of those. They want Cash App to be number one, because in the tech industry, the number one is usually by far the number one, and the tech industry tends to monopolize the number one, maybe the number two, as well. So it's important to be one of the top two. Just remember, you can get access to my valuation models and other exclusive content by joining my Patreon. It's only $1. There's only 100 seats available. I'll post a Square valuation model on Patreon this week. It is a can't miss, so check that out. So what am I doing with Square stock? Square stock ran up huge today. Huge. And this is a dilution. Just keep in mind, we're being diluted here, but I think the synergies are worth it. So in terms of this deal, Square is actually currently a large portion of my portfolio. It's about, I think, 1/5 of my portfolio. So I'm comfortable with my current Square position. So for that reason, I am holding. Since this is an all-stock transaction, we'll see dilution. I want to see tangible synergies after the buyout completion. That's important to me, is to actually see the numbers and see the benefits for Square. So comment down below. What are you doing with Square stock? Are you buying? Are you selling? Holding? Let me know. Oh, and also, Square just released early their Q2 2021 earnings, and this was a surprise. I was not expecting this. So I'm going to create a second video, maybe later today, maybe tomorrow, with my thoughts on that. I'm going to go over the numbers, crunch the details, and give you the results and my thoughts on that in that later video. So just remember, click on the notification bell so you don't miss it. Don't forget to smash that like button and subscribe. Thank you to the channel members. Thank you to the patrons. You guys are amazing. You keep this channel going. Thank you for watching this video, and I'll see you in the next one.